future belongs to organizations that can adapt, innovate, and execute faster than the competition. Technology sits at the center of this transformation. I'm Faraz Sayed, and on this channel, I'll share executive insights on cybersecurity, AI, infrastructure, and the technology strategies shaping the future of businesses. Welcome to PureStack. Welcome to part 2 of our cyber insurance claim episode. Now let's talk about backups, because this is something that catches a lot of businesses off guard. It's not enough just to say that you have backups of your computers, servers, and your datas. Insurance company wants to know that those backups actually work. The only way to prove this is to have them tested on a regular basis. We, and also the insurance carrier, recommend at least once a month. Because if you never restore from a backup, you really don't know if it's going to work when you need it the most. They also want to see you have more than one copy of your data. That means keeping a local backup, another backup in the cloud, and at least one air-gapped backup that's completely disconnected from your network. And the reason is simple. If ransomware gets into your systems, you don't want it encrypting your backups along with everything else. Having an isolated backup gives you a way to recover without paying the ransom. Here's the part that catches owners off guard. Every one of these security controls is a line item on the insurance application. Even one of them isn't genuinely placed the day the breach happens, that gap is what the carrier will use to reduce or deny your claim. So this security stack and the insurance policy aren't two separate things. The stack is the policy's fine print. Now, why is it so hard for business owners to keep all this in place? Keeping a security stack in place is a lot, and it never stops. Each of these controls have to be deployed correctly, they have to be kept up to date, and they also have to be proven if a claim is ever filed. Most small to mid-sized businesses don't have a team whose full-time job is to make sure that every piece of the puzzle stays across every device and every user. So things do drift. A new laptop gets added without multi-factor authentication. A firewall update gets skipped. A former employee's access never gets removed. None feel urgent today, but any of those gaps is exactly what a carrier looks for when a claim lands on their desk. So what's the real problem underneath all of this? The real problem is that three different worlds rarely talk to one another: business, cybersecurity, and insurance. The business owner understands business, but not the technology. The IT team understands the technology, but not how an insurance policy actually pays out. Finally, the insurance agent understands insurance, but not the security controls that the policy depends on. Even larger companies have the same gap. A CTO may run technology well, the security lead may understand the defenses, but neither of them usually read the insurance binder line by line to see where the company is exposed. When no one owns all three, things fall through the cracks, and those cracks are exactly where claims get denied. We have a different approach. We start from a different place. Instead of selling one piece of security and upselling more later, we provide the full stack from day one. Every control we just walked through: multi-factor authentication, managed firewall, MDR, SCM logging, email security, secure DNS, permission mapping, patching across every device, server, tested air-gapped backups, comes as one package, deployed and maintained for you. The goal is to cover all attack surfaces the way large enterprise would, then deliver it in a way smaller businesses can actually run. Just as important, we look at the security and the insurance together, because in practice, they're inseparable. We work with insurance carriers so they can see exactly what protections are in place. And when a carrier can verify that the business is running the full stack, they often translate into a more favorable premium. Usually we see about a 30% discount on the premium. Because security is consistently a moving target, we monitor and log continuously, adjusting as new vulnerabilities appear. The point isn't just to install tools, it is to close the gap between what a business is protected by and what the policy will actually honor. I can give you an example of how this gap shows up in the real world. We walked into a business that genuinely believed they were covered. They had a policy. They paid their premium every month. On paper, everything looked fine. But when we reviewed their actual security against what the policy required, pieces were missing. Controls that were assumed but never implemented, backup process that wasn't reliable, and answered on the application that had no longer matched the actual reality. If a breach had happened, those gaps would have been the difference between the claim that pays and a claim that's denied. The hard part is, none of it was obvious to the owner. Everything felt handled and the exposure stayed invisible until somebody looked closely. Two things happen when the gaps are closed. First, the business is genuinely better protected, not just insured on paper, but actually defended against attacks that are most common. Second, the relationship with the insured changes. When the carrier can verify the controls are real, coverage becomes more dependable and in many cases more affordable. The business stops hoping the policy will hold up and starts knowing where it stands. That shift from assumption to clarity is the whole point. Now, what should a business owner do if it finds that they have these gaps? Start reading your own policy, specifically the conditions and the sublimits. Find the list of security controls that the policy requires. Then ask an honest question to yourself and your team. Do we actually have every one of these in place today on every device and on every account? Then find the sublimits and learn exactly how much the policy pays for ransomware, business email compromise, and what happens if your backups are found to be inadequate. If you can't answer those questions confidently, that signal usually means there's a gap between what you think you have and what you are actually covered for. What should the business prioritize? Close the distance between your security and your policy. The two should match. Every control your insurer assumes you have, you should genuinely have in place and verifiable. Don't treat your security and insurance as separate purchases handled by separate people. They are two halves of the same protection. And favor simplicity. A complete, consistent set of protections you actually maintain is worth far more than a longer list of tools nobody fully owns. When your cybersecurity and your coverage are aligned, you remove the single most common reason claims get denied. If there's one thing a business owner should remember about cyber insurance, a policy is only as strong as the security behind it. Cyber insurance doesn't protect you because you bought it. It protects when the controls it assumes are genuinely in place the day an attack happens. The businesses that get caught off guard are usually the ones who ignore the security, the ones who assume they were covered and they never checked. The goal isn't to buy more insurance or more tools. It's to make sure that the protection you already are paying for will actually be there the day that you need it. Get those two things aligned? Real security and the coverage, it depends on it. And you've removed most of the risk that catches businesses by surprise. Technology works best when it quietly helps your business move forward, supporting your people, your processes, and your objectives. If today's episode gave you a different perspective on IT strategy, cybersecurity, compliance, or growth, subscribe to PureStack for more practical insights. Thanks for watching. We'll see you next time.